May 6th, 2010, 2:32 p.m. Eastern. The Dow Jones is sitting at 10,460. It is a quiet Thursday afternoon on Wall Street. By 2:47 p.m., 15 minutes later, the Dow has fallen 998 points. $1 trillion in market value vanished. The deepest, most liquid equity futures market in the world is in free fall. Trading screens show numbers that should not exist. Some stocks briefly trade at 1 cent. Others briefly trade at $100,000 a share. It lasts 36 minutes. By the closing bell, the market has recovered almost everything. But no one knows why it happened. No one knows what caused it. The SEC, the CFTC, the Federal Reserve, the New York Stock Exchange. None of them can explain it. 5 years pass. Investigators chase ghosts, algorithms, exchange-traded funds, the Fed, Greek debt. They are all wrong. In April 2015, Scotland Yard officers in body armor knock on the door of a modest stucco, semi-detached house in Hounslow, West London, a street directly under the Heathrow flight path. The man they have come for has never set foot in the United States. His name is Navinder Singh Sarao. He is 36 years old. He lives with his parents. He owns a yellow bicycle that he calls his Lamborghini. He has spent the last 5 years sitting at a small desk in his childhood bedroom, listening to passenger jets roar overhead every 90 seconds, trading futures contracts from an off-the-shelf trading platform he modified himself. He is worth approximately $70 million, and the United States Department of Justice is about to accuse him of breaking Wall Street. This is the story of the Hound of Hounslow. Navinder was born in Hounslow in 1979, the middle son in a Punjabi Sikh family. The neighborhood was working class, immigrant, ordinary. His father worked. His mother kept the house. The boys grew up sharing rooms. He was different from a young age. Quiet, precise, pattern-obsessed. He could memorize timetables, sequences, the shapes of moving numbers. The condition would not get a name for another 2 decades. By the time it did, the diagnosis was Asperger syndrome. He went to Brunel University and studied computer science and mathematics. After graduation, he took a job at Futex, a trading arcade in Woking. Futex gave traders firm capital in exchange for half of the profits. It was a finishing school for screen-staring obsessives. Navinder fit. He stayed for years, made money, moved to a firm called CFT Financials in 2008. And then, around 2009, he stopped going to the office. He moved his trading setup home, to the same bedroom he had slept in as a boy. What he was doing in that bedroom was technically legal at first. He traded E-mini S&P 500 futures on the Chicago Mercantile Exchange. The E-mini is one of the most heavily traded futures contracts in the world. Every contract represents $50 times the S&P. A single contract can move $1,000 in seconds. The order book moves at the speed of light. Most traders cannot follow it. Navinder could. He saw the order book the way other people saw a chessboard. The bids and offers were pieces. The flow was a game. He could watch the screen for 14 hours and never blink. The Asperger pattern recognition that had made him a strange child made him, at 30, one of the best E-mini traders in the world. By 2009, he had built something he called the layering algorithm. It was not particularly sophisticated. He modified a commercially available trading platform. In 2012, he paid a Chicago programmer named Jitesh Thakkar $24,000 to write him a custom spoofing program. The mechanics were simple. Place 4 to 6 exceptionally large sell orders, all stacked above the market price. Let them sit. Let the algorithms in Chicago see them. Make the algorithms think a wave of selling was coming. Watch the price slide down to meet the imaginary supply. Then buy at the lower price. Then cancel every one of the original orders before any of them could fill. He was lying to the market. He did this thousands of times a day, across hundreds of trading days. From April 2010 to April 2015, his layering algorithm placed orders on more than 400 trading days. Most of them were canceled before they ever touched a real buyer. Total lifetime earnings from this game, approximately $70 million. He did not buy a house. He did not buy a car. He did not buy clothes. He wore the same cheap tracksuits for years. He kept the yellow bicycle in the front hallway and joked to people that it was his Lamborghini. He could not, according to those who knew him, complete simple domestic tasks. He did not know how to do laundry. He ate jam sandwiches. At 31, from a bedroom under the flight path, he was moving as much sell-side pressure on the E-mini as some of the largest institutional traders in the world. And he was, in his own words, just playing a computer game. May 6, 2010. Markets open weak. Greek debt is spiraling. Concerns about the Eurozone are everywhere. By early afternoon, the Dow is down 2.5%. At 2:32 p.m. Eastern, a mutual fund company in Kansas called Waddell & Reed begins to dump E-mini contracts. 75,000 of them. $4.1 billion in notional value. It is a portfolio hedge. It is being executed by an algorithm. The algorithm is told to sell aggressively, to complete the order quickly, with no regard for price. The order book begins to thin. Buyers step back. Sellers pile on. And underneath all of it, his layering algorithm has been running for over 2 hours. In those 2 hours, Navinder Sarao's program places, modifies, and cancels orders approximately 19,000 times. The orders themselves represent, at peak, almost $200 million in apparent sell pressure. None of them are intended to be filled. They sit, briefly, above the market. They make the algorithms in Chicago believe in supply that does not exist. The Dow drops 600 points in 5 minutes, then 700, then 900. By 2:47, 998 points, nearly $1 trillion in market value, evaporated. The system briefly does not know what anything is worth. By 3:08 p.m., the market has recovered most of the loss. By the close, the Dow is down only 3.2% on the day. Sarao's profit from those 36 minutes, $879,018. He goes to bed. The next morning, the SEC and the CFTC begin an investigation that will last 5 years. They will publish a joint report blaming the Waddell & Reed sale. The Chicago Mercantile Exchange will publicly dispute that conclusion within 24 hours. Academics will write papers blaming high-frequency trading, exchange-traded funds, the structure of modern markets themselves. None of them will name Navinder Sarao. For 5 more years, he sits in the same bedroom. The yellow bicycle in the hall, the jam sandwiches, the layering algorithm running every day. He thinks he has gotten away with it. April 21st, 2015. Scotland Yard arrives at the door in Hounslow. The arrest takes minutes. The man who has spent the last 5 years quietly amassing one of the most unlikely fortunes in modern financial history is led out of his parents' home in handcuffs. He is 36 years old. He has never been to America. He has never lived alone. He is taken to Wandsworth Prison in South London. Victorian, grey, cold. He spends 4 months there before bail is granted, secured against his parents' house. While the US government has been hunting him, Sarao has been hunted by someone else. In 2012, while still trading from his bedroom, he was introduced to a Mexican financier named Jesus Alejandro Garcia Alvarez. Garcia ran a Zurich-based firm called IXE Group. He told Sarao he could guarantee returns of 11%, risk-free. Sarao wired him $17 million. A year later, he wired another $15 million. The money disappeared into shell companies, forged bank guarantees, a failed Swiss bank acquisition. None of it was recoverable. Sarao also gave money to a company called Iconic Worldwide Gaming. He gave money to a fraudulent UK tax avoidance scheme. By the time Scotland Yard arrived at his door in April 2015, most of his $70 million was gone. The man who broke Wall Street had been getting played by con men in suits for years. In November 2016, he pleaded guilty in federal court in Chicago to 1 count of wire fraud and 1 count of spoofing. The judge was Virginia Kendall. Sarao agreed to cooperate. He testified in other spoofing cases. The stress caused him days of insomnia at a time. On January 28, 2020, Judge Kendall sentenced him. The prosecution had asked for prison, years of it. She gave him 1 year of home incarceration. At his parents' house, the same bedroom, an ankle monitor. She ruled that prison would damage him uniquely. His Asperger syndrome had affected his ability to form criminal intent. He had cooperated extraordinarily, and he had already lost every dollar he had made. The court ordered him to forfeit $38.4 million in disgorgement. He could not find it. He had already given it to the con men. The trader who broke the markets from a bedroom under the Heathrow flight path was, in the end, just another mark. The Asperger savant who could see the E-mini order book like a chessboard could not see the man across the table at IXE Group. The yellow bicycle Lamborghini was, in retrospect, the most honest possession he owned. Everything else was promised, wired away, and gone. He thought he was playing a game. He thought the screen was the world. He thought the money was the score. He was wrong about all three. The market did not punish him. People did. The trade you cannot see is the one that takes everything. Navinder Singh Sarao now lives in the same room he grew up in. The yellow bicycle is still in the hallway. The planes still roar overhead every 90 seconds.